What do you guys think of this one? I'm seeing a lot of good trade comments. Seeing a little bit of risky and high risk. Seeing a couple different divergent opinions. Okay. Now, the short answer is not too bad. Hourly was trending down nicely. 30-minute was trending down. The 15-minute was trending down. In fact, it had a retest back up and was starting to roll back, over from that test on the 15-minute. I don't like that the 15 was still above, or that the speed lines had crossed back above. Okay, so that adds a little bit of a component to risk. Although the hourlies and the 30 minutes were still okay, and we were coming off the backside of a test of the 20-period moving average here. Okay, so then when we got the swoop back over, okay, with the momentum going down, with the pullback back up to the 20 being on light volume, with the fish hook here, I felt that this was worthy enough for a trade, albeit more likely on less contracts because of the fact that there was some risk component to it. Not as risky as certainly some of the other examples I intentionally showed to try to test your wherewithal. But overall, I think this was a pretty good trade. So good trading example here. Okay. All right, next. What do you guys have to say here? What are things you notice about this one here? Now, I demonstrated this one to you guys as far as it was in pre-hours, and I talked about this when the regular session opened up that day. So I'm just going and testing you. Okay. And the answer is I loved this setup from the chart perspective itself. MACD rising, volume dried up on the pullback to the rising speed lines. Crooked finger here, okay? I can't expand it because it's not a live chart, it's a picture of it now. I loved the crooked finger, MACD up, volume pullback. This is almost picture perfect. It cleared the resistance, which was right here, okay? So the challenge is, number one, it was pre-hours, and I wasn't there. And number two, for a conservative trader, this was against the trend, okay? This one made it right up to the area of my resistance. Remember, look, this was days ago. 2350 to 2550 was my resistance level. And, where do we get up to here? Okay, so remember what I said, that you have to look to be exiting that trade in that circumstance. Yeah, absolutely, Mark, because of the fact that it was swooping back up. It had the MACD, the volume dry up on the pullback, and the crooked finger. What I'm saying is this here, especially if you've got the hourly 30 and 15 going your way, is a really, nice little setup right here. Love those crooked fingers where the volume dries up right at the speed lines, okay? But because the hourly was not in our favor, you have to go ahead and do exactly what I've said the last several slides. Look to go ahead and be taking profits by the resistance level, which in this case was 23.50 to 25.50. I mentioned it earlier in this presentation as well. And sure enough, that's where it stopped out. When the hourlies and 30s and that are going against you, that first resistance level or support level, depending on the side of the trade you're on, is likely to go ahead and give you grief. Okay? Okay, a couple more 5-minute charts, and then we're going to move on. All right. What do you guys have to say about this one here? Okay, Nathan's asking if liquidity is a factor. Liquidity is definitely a factor. That's why I like to go ahead and not use this trade, before midnight Central Time. Okay, and this one, people are going ahead and giving me a big green light that this looks good, nice trend, et cetera, et cetera. And the short answer is it is a good trend. We've got cooperation on the MACD. We've got the rollover. You see, came up counter trend, then went back in the direction of the trend here. Okay, and there again, there's that doji star, which I've talked to you guys about. Okay, the 15, the 30, and the hourly were all down. So good trade opportunity there, and as Gary just pointed out, was very close to the thing. Yeah, Richard, and that's fine. Low liquidity, if you're trading 1 or 2 contracts or 5 contracts, a couple hundred contracts on a 5-minute bar, may be acceptable. In this case, this was actually before midnight, okay? This was about 9:45 at night my time. Okay, I took this as an example because I wanted to go ahead and show the chart patterns, because this same setup can and will happen at 2 o'clock, 3 o'clock, 4 o'clock in the morning, 10 o'clock, 11 o'clock, 12 o'clock in the afternoon. Okay, so because of that, a chart is a chart is a chart. And but yes, again, this does not meet the liquidity requirements, the time requirements for the no trade zone, as I outlined them earlier. But the setup itself is good, so I wanted people to see the example. Okay, 2 more examples on the 5 and we're done here. All right, what do you guys think about this? Okay, Tom? David? Okay, for all of you that answered that this one looks good, you're correct. This one was, pretty good. It's pre-hours, okay? So, and again, this is the backside of the morning, so it's averaging a little bit closer to 1,500 contracts, approximately 2,000 contracts, okay? So, from a liquidity perspective, for people who are doing a handful of contracts, not too bad. And so certainly the 20-minute was rising. the 15 is rising. You can actually see this. The 15 gang was going ahead and kind of resurging back from its own consolidation and push back up right there. See it? Pull back. It was starting to resurge after this bar here. The 30-minute was in a very nice uptrend, as was the hourly chart. Okay, so RSI, MACD were good. You had the RSI here. MACD not so great on the 15. MACD, not so great on the 30. Hourly MACD very good. So again, that's why I don't talk so much about the 15 and the 30 in relation to the 5. I talk a lot about the 5 and the hourly because I'm looking for a lot of times pullbacks within that hourly and resumptions. Okay. So bottom line is it had, the higher bars on volume. You guys can see these are two blue bars here. And then it had a pullback bar on lighter volume, which at the time when it pulled back, it was a fish hook. Now in this case, it took an extra bar of slippage for about, looks like half a point, or a quarter point of slippage, and then went ahead and had a little bit of a move, stayed sideways, and then went ahead and moved again. Okay, not a lot of profit potential in there, but in pre-hours that happens sometimes. Pre-hours you get some huge moves really fast, or you can get the worst trickle in the world, and it is so painful to watch pre-hour trickles because you're making or losing a quarter point over the course of like 5 minutes. If anybody's traded pre-hours, you know what I'm talking about. And the bottom line is it's just like, talk about watching paint dry when you get into a slow mover. But then sometimes they get very exciting very fast, and then you're like, wow, that was great, especially when you're on the right side of it. Liquidity kicks in and everything else. So, but overall, from a trend identification perspective, okay, regardless of the fact that this is pre-hours and that, you had the other factors we're looking for there. Okay, one more on the 5 minutes here. Okay, here we have the 5-minute chart. What do you guys have to say about this one? Final 5-minute chart. Let's see if we can get some good participation and see what your thoughts are. Okay. Bottom line here is, and this is the theme I want you to remember, this was sideways Swiss cheese. Okay. No question about it. So for a conservative trader, no trade. Okay. Now, you did have a nice crooked finger here, inverted crooked finger. You had MACD, below RSI, MACD, and you had a rollover back on down, okay? So, but at the same time, you were very close to your support level. So you got to keep in mind when you see a trendless market and you're near the support level, what can happen? Well, in this case, it went in and actually cut a little bit into the 23.5 to 25.5, then popped back out, right back near to the high, near the entry point if you entered on this bar, and then it did roll back over again. But that's the point. If you're this close to a support level in a trendless market or the trend's going against you, very high risk of a retracement. Okay? So, and the only thing that saved this type of setup was you had a good MACD, you had a crooked finger here, and that so you had some things kind of helping to push it down a little bit more. But even in the face of that pushing, because of the sideways trend across the board here, it snapped right back up again. So was there an opportunity for profit? Yes, there was. Was it higher risk and had to be done quickly? Yes, it was. Okay, so good. Lot of good comments here for all of you guys. So with that being said, Now what we're going to do is go look at the 15-minute charts. And I have, but I did about half the examples on the 5-minute charts. And we're going to speed up a little bit. Okay. Go ahead and tell me what you guys think of this chart here. Now, keep in mind, this is different. Why do you see that? This is now the 15-minute chart. Remember I told you what I did was I stretched it across. So on each of these chart slides you're about to see, this will be the 15, the 30, and the hourly, and then the daily. Okay, I covered up the 5 minutes so you can focus on the 15. So what do you see here? Okay, for those of you that are wondering why this may look familiar, I actually did part of this trade. This was on Friday of last week. And of course, I did it back in here. So then Jens, our friend Jens went ahead and was asking me what I thought about this. He came in to ask me what I thought about this, and I did tell him that overall the trend is still in place. But you're right, we're very far away from the 20. But bear in mind, gang, now keep in mind this is the 15-minute chart. This is the 15-minute chart, so we are going to be further away in many cases from our support and resistance levels here. That's why we almost have to go back down then to the 5-minute chart for an execution, unless you're going to be fixated then and be willing to accept wider stops, okay? So instead of using the 20-period moving average for your stop out, maybe you want to use a close below the speed line, the slower speed line, okay? That brings you back up a little closer to more of the 2-point range. But this is what you guys have to keep in mind, is that if you're going to take these trades, and this was kind of like a crooked finger over on the 15-minute, okay, the volume dried up as it pulled back to the speed line. There was good profit opportunity from around the 12.5 area up to the 15, so 2.5 points over the course of the next 45 minutes. But then there's also going to be more pullback. Okay, so we saw these 5-minute charts, but if you're going to go for the bigger profits, you're going to go ahead and have to look at your targets then. The 20-period moving average may be too far away. You're going to have to look at the speed line as being potentially more of a stop-out point. Again, I can't tell you where to put your stops. You'll see where I put my stops, but just keep that in mind. If you're trading off the 15-minute chart, you may have to reassess where your speed lines in that are, unless you're close enough to the beginning of the trade, okay, of the resumption. Okay, Richard, thanks for the idea. All right, next slide here. All right, what do you guys think here? And, Richard, of course, we're going to have a whole lot of that as we go, forward. Every day is going to be right there on that side as well. All right, so what do you guys think here? Okay, so we have a hourly chart that's in an uptrend. We have a 30-minute chart that's in an uptrend. Look what happened with my speed lines. So it resumed the direction of the 20-period moving average, didn't it, gang? Yes, it is more important that the trend is up. David's asking the question, is it more important that we're trending up versus that we're above the zero line? The perfect scenario is we're trending up and above the zero line, David. Much better if you get both, okay? But the fact that the MACD is trending is important. You get both of them, you get, in my mind, a higher probability setup. Okay, so I hope that answers your question, because the better setup is having them both, but it is doable even if it's coming from the underside, as long as it's coming. You bet. Okay, so, and then we had the nice swoop, as Ryan went in and pointed out. Very good. Okay, next slide. All right, what do you guys think? Yay or nay? Okay, getting a lot of good answers here. Very good. Yes, the bottom line is that while the trend is rising, it reconvened in the direction of the trend. Important to note that the 30-minute chart was doing the exact same thing there, gang. Okay, and then of course the hourly fell. The hourly wasn't a nice uptrend. The market came right down to that hourly and then started to explode. And you see everything started to turn back up here on each of these. Okay. So, and then what? Basically, we had a real light volume pullback, held the speed line, and went ahead and continued on up. So, I agree that's more of a yay, albeit I would have gone ahead and used reduced size if I was trading off of this actual chart, because this was pre-hours. Just wanted to go ahead and show that to you. It wasn't trying to trick you or anything, just trying to show you that these setups do occur in pre-hours. It's pretty close to a V spike, yes. Scott, this is close. So it's not perfect because it didn't quite deep divot in as much, but it's pretty darn close. But on the pullback, it was on real light volume, in absence of selling. Okay, so very good. Here, let's get the next one up and continue on. All right, what do you have to say about this one now based on what you've learned? Now, let me just try to highlight these. So you see right there, the bar in question is right there versus here, and then here on the hourly. Of course, it's this one on the daily. What do you guys say? Yay or nay, and why? So we've been talking about this stuff now for about 3.5 hours. I'm expecting some good answers here. Okay. And the answer is that this is a very high-risk one here. There's some things I really like about this, okay? I want you to know. I really like remember now, this is a 15-minute chart, and you know I love my fish hooks, okay? All right, so we have a 15-minute chart with a fish hook at the 50. You got the MACD turned back up. You have this huge thrust up and a real light volume pullback, okay? The the speed lines really started to come around here. Look at that. All right, those are some things I really like about that one. Okay, but on the 30 and the 60-minute chart, you were basically sideways. All right. Now that being said, I do want to point out what I also like though here, which was look at the volume on the 30 and the 60. You had higher volume when you came back off these lows, just like right here. So heavy volume came in, stopping volume kind of came in here at these levels. Okay, so we weren't an uptrend. We were going sideways. Okay, so uptrend to sideways. So when I saw this resumption here, this type of setup, I think this one, you know, looks good. It's higher risk. I'm the first to acknowledge that. But there are some things I really liked about it, and I want to point those things out to you. Okay? So what would this be a candidate for? This would be a candidate for a lower size type trade. Well, Alan says lots of tails is a negative, but Alan, also keep in mind we also had some important tails to the upside here. Okay, that's what I don't want you to lose sight of. Okay, we talk about these tails all the time in our trading here, but we have some important tails to the upside as well. Okay, just keep that in mind. Yeah, this bar after the setup, because that was right up down around here was where the setup came into play. So after the setup, it shot up dramatically, which created a V spike after the fact. Oh, you're very welcome, Gary. That's why I want to explain some of these things. Because, yeah, we're sideways on the 30 and the 50, on the 60, okay? But we also had some bullishness that came in here as well right before the setup. Right before the setup. And then previously in the background as well. Okay? Can't overlook that. So let's go ahead and go to the next one. And okay, let's go ahead and we'll try to step it up here a little bit with the speed of the answers. Guys, what do you think? Just like in real time, we're trying to make a decision here. Okay, clock's ticking, bars are locking in. Yay or nay? Okay, I'm seeing some no's. Why not? Tom says okay. A couple other people say no. That's right. The short answer is basically you're right into the middle of the resistance level here, and that makes it much higher risk. Keeping in mind that you're at least a good 2 points away from your next support level. In this particular case, we do have, you know, quite a bit of resistance here. The bar before our trade bar here did come down on from the resistance level. There's also a weekly level. You guys see it in there? You see the light gray or the light green? That was a weekly pivot point in there, right along with my support resistance level. The bar came well off its high on higher volume back here, okay? So the risk was far greater on this trade. Overall, I'd like to point out the trend was good on the 60 and the 30, okay? I took a trade kind of similar to this on Friday. So I'm willing to participate in here a little bit more, but for the average trader, this might be a little bit risky until you get more comfortable with the setups. So, very good in identification. Watch, though, the bars preceding. If you're going to trade up near a support or resistance level, you got to keep in mind what's happening with the bars before. Is supply starting to come in? Okay, that makes it far more risky. So this is a little bit different circumstance than the trade that I took Friday, but nonetheless, I've taken trades into resistance, but then I got to cut what did I have to do? I had to cut my profit target short, didn't I? I went for a one point profit for ticks profit instead of multiple points because I couldn't just go ahead and run the risk of letting it run. So there's nothing wrong with that. Scott's used a little analogy, when in doubt, opt out. So that's good. Okay, very good. Let's go to the next one. Okay, how about a little bit earlier back on that trade?